The Vietnam Shipbuilding Industry Corporation, also known as Vinashin, was once one of Vietnam's most prominent companies. Established as a state-owned enterprise, Vinashin aimed to propel the country's shipbuilding industry forward, positioning Vietnam to compete with its East and Southeast Asian counterparts. The corporation swiftly rose to prominence, catering to both domestic and international markets. At its peak, Vinashin employed around 70,000 workers and made significant contributions to the Vietnamese economy. However, the story of Vinashin took an unfortunate turn as the company faced numerous challenges, including poor management, corruption, and a lack of financial transparency. These issues ultimately led to the company's rapid decline and eventual collapse. In 2010, Vinashin found itself on the brink of bankruptcy, having amassed over $4.4 billion in debt. This financial crisis raised widespread concerns about the management of Vietnam's state-owned enterprises. Despite its initial promise, Vinashin serves as a cautionary tale, highlighting the importance of proper corporate governance and financial management in state-owned enterprises and the shipbuilding industry. To gain a deeper understanding about how Vinashin collapsed, let us start from the very beginning. Vinashin was established in 1996 as a state-owned enterprise with the ambitious goal of turning Vietnam into a global shipbuilding powerhouse. At its peak, Vinashin employed over 70,000 workers and boasted assets of more than $4 billion. The government envisioned Vinashin as a state-owned enterprise that would not only create jobs and generate export revenues, but also contribute to the development of related industries such as steel production, marine engineering, and logistics. In the late 1990s and early 2000s, Vinashin embarked on an ambitious expansion plan, acquiring shipyards and establishing joint ventures with foreign partners. The company's growth was fueled by strong demand for new ships, driven by the global economic boom and the rapid expansion of international trade. During this period, Vinashin secured several high-profile contracts with international shipping companies and successfully delivered a range of vessels, including cargo ships, oil tankers, and container vessels. Vinashin also focused on expanding and modernizing its operations. Vietnam has over 60 shipbuilding and maintenance companies, with the industry seeing steady progress since the establishment of Vinashin in 1996. Most of the Navy's cruisers and equipment come from Russia, the US, and China, while larger transport ships, like the Truong Sa-class ship, are built by Vinashin. Vinashin has actively sought cooperation with foreign partners to acquire the latest technologies and has been open to accepting foreign advisory services. Following the Korean and Japanese way of developing shipyards and building ships, the company has been upgrading its 30 existing factories in recent years. Vinashin has also modernized facilities at 7 shipyards, including Nam Trio, Ha Long, Bac Dang, Pha Rong, Ben Kian, the Saigon Shipbuilding Industry Company, and the Saigon Shipbuilding and Marine Industry Company, primarily in the Haiphong area. Since receiving its first international order in 2000, Vinashin's shipbuilding operation has grown rapidly, securing several international orders from major shipping companies. The company offers a wide variety of new building options, including bulk carriers, container ships, oil tankers, car carriers, and other custom-made ships, ranging from sub-handy sizes to VLCCs. In 2006, the first 2 53,000 DWT vessels were launched at the Halong Shipyard and Nam Trio Shipyard. Vinashin has continued to construct new, more complex ships, such as the 4,900 and 6,900 unit car carriers for export to Israel and Norway. The company has also built numerous multi-purpose cargo ships for Japan, South Korea, Great Britain, and Denmark at various shipyards within the Vinashin Group. As Vinashin's operations grew, so did its ambitions. The company began to diversify into a range of non-core businesses, from real estate and financial services. This rapid expansion and diversification were encouraged by the Vietnamese government, which saw Vinashin as a vehicle for promoting economic development and modernization across a range of sectors. However, Vinashin's diversification strategy soon proved to be its Achilles heel. The company's management was ill-equipped to manage such a diverse portfolio of businesses and lacked the necessary expertise in many of the sectors it had entered. Moreover, Vinashin's expansion into non-core businesses stretched its resources thin and exposed the company to a range of risks, including the volatility of real estate and financial markets. By the mid-2000s, cracks began to appear in Vinashin's facade. The company's shipbuilding operations faced growing competition from Chinese shipyards, which were able to offer lower prices and shorter delivery times due to their lower labor costs and economies of scale. At the same time, the global shipping market began to soften as the economic boom that had fueled demand for new ships started to falter. These external pressures exposed the weaknesses in Vinashin's business model as the company struggled to manage its diverse portfolio of businesses and cope with the downturn in the shipbuilding market. By 2008, Vinashin was facing severe financial difficulties as mounting debts and falling revenues put the company on the brink of collapse. The downfall of Vinashin began to unravel in 2010 when the company defaulted on a $600 million international loan, revealing its severe financial difficulties and massive debt burden. The default sent shockwaves through Vietnam's financial markets and raised questions about the management and oversight of the country's state-owned enterprises, SOEs. Mismanagement and corruption played significant roles in Vinashin's decline. The company's aggressive expansion plans were not supported by a solid financial foundation, leading to a debt of more than $4.4 billion. Additionally, the company was plagued by poor decision-making, inefficient operations, and a lack of financial transparency. Several Vinashin executives were arrested on charges of corruption and economic mismanagement, further tarnishing the company's reputation. As Vinashin's financial troubles deepened, the Vietnamese government stepped in to provide support, offering financial assistance and facilitating debt restructuring negotiations with creditors. The government's intervention was motivated by a desire to protect Vinashin's workforce and preserve the company's role as a national champion in the shipbuilding industry. Despite these efforts, Vinashin's financial situation continued to deteriorate, culminating in the company's default on a $600 million international loan in 2010. The default marked the beginning of the end for Vinashin, as the full extent of its financial woes and mismanagement became public knowledge. The collapse of Vinashin and the subsequent investigations led to the arrest and prosecution of several key figures in the company. These arrests exposed the extent of mismanagement and corruption within the organization. Pham Thanh Binh, the former chairman and CEO of Vinashin, was arrested in August 2010 on charges of, quote, intentionally violating state economic management regulations causing serious consequences. Binh was later sentenced to 20 years in prison for his role in Vinashin's collapse. Additionally, 8 other executives from Vinashin were arrested and charged with similar offenses. Among them were Tran Quang Vu, the former general director of Vinashin Lines, who was sentenced to 22 years in prison, and Tran Van Liêm, the former deputy general director of Vinashin Ocean Shipping Corporation Limited, who was sentenced to 19 years in prison. These legal actions against Vinashin's executives not only exposed the level of corruption and mismanagement within the company, but also served as a stark warning to other state-owned enterprises in Vietnam. The arrests and convictions underscored the Vietnamese government's commitment to rooting out corruption and improving the management and oversight of its state-owned enterprises. Following the collapse of Vinashin, the Vietnamese government took action to restructure and salvage the company's remaining assets. The government sought to create a more sustainable and efficient shipbuilding industry by consolidating Vinashin's assets and transferring them to other state-owned enterprises. In 2013, the government established the Shipbuilding Industry Corporation, SBIC, as a successor to Vinashin. SBIC took over many of Vinashin's assets, including its shipbuilding facilities, shipyards, and some of its debt. The aim was to create a more streamlined and efficient organization that could help revive Vietnam's shipbuilding industry. Furthermore, some of Vinashin's assets were transferred to other state-owned enterprises, such as Petro-Vietnam and Vietnam National Shipping Lines (Vinalines). This move was intended to help these companies strengthen their operations and improve their competitiveness in the global market. In the years following the restructuring, the Vietnamese shipbuilding industry has shown signs of recovery. SBIC has managed to secure new shipbuilding contracts and attract foreign investment, helping to rebuild Vietnam's shipbuilding reputation. However, the industry still faces challenges in terms of technology, capacity, and management as it works to regain its footing on the global stage. Vinashin's collapse had a significant impact on Vietnam's economy, as it not only triggered a crisis of confidence among foreign investors, but also raised concerns about the country's financial stability. The company's default led to a downgrade of Vietnam's sovereign credit rating, resulting in higher borrowing costs for the government and other Vietnamese companies. Moreover, Vinashin's failure also had broader implications for Vietnam's shipbuilding industry. The collapse tarnished the reputation of the sector, making it more difficult for other shipbuilders to secure international contracts and financing. The story of Vinashin's collapse serves as a stark reminder of the perils of mismanagement, corruption, and weak governance in the corporate world. While the scandal has left a lasting impact on Vietnam's economy and reputation, it has also provided valuable lessons and insights that can be applied to other SOEs and emerging markets. As we reflect on the Vinashin saga, it is clear that the pursuit of growth and development must be balanced with the need for strong corporate governance, transparency, and accountability to ensure the long-term success and sustainability of both individual companies and national economies. But anyway, do let us know what you think. Thanks for watching.